In other news now, researchers at the state-run KDI have revised upward their growth projections for the South Korean economy, citing stellar chip exports. Our Ju-yeon has the latest outlook.
Korea's state-run think tank, the Korea Development Institute, has upgraded the country's GDP growth outlook for the rest of this year and next year. According to a report released by the KDI on Wednesday, it raised Korea's GDP growth forecast for this year to 3.2%, up 0.7 percentage points from the previous estimate in May. The institute also upgraded next year's growth outlook by 0.5 percentage points compared to its previous estimate. A KDI official explained that the upward revision was driven by expectations that the current semiconductor rally will persist. Exports and facility investments have shown strong momentum so far this year, and this positive trend is expected to continue on the back of sustained global AI investments. The growth outlook for goods exports this year was upgraded to 8.7% this year, higher than its May forecast. Likewise, the growth outlook for facility investments was also raised to 7.9% this year, led by global AI infrastructure expansion. In light of these economic developments, the current account balance is projected to record an unprecedentedly large surplus. Driven by surging semiconductor prices, the KDI expects a current account surplus of around $360 billion for both this year and the next. However, because Korea's economy relies heavily on global chip demand, experts warn that future fluctuations in the semiconductor market could trigger greater volatility.
The problem is that semiconductors account for 39% of our total exports, and exports represent 41% of our GDP. If the growth in semiconductor exports slows down, then the growth rate of our total exports could also slow down, ultimately lowering our economic growth rate.
Because Korea's growth has been heavily concentrated in the semiconductor sector, which has a low employment inducement effect, the KDI report also highlighted that the high growth rate has not translated into a clear improvement in the labor market. Therefore, despite the strong overall outlook, the report projects household-level economic indicators such as private consumption and employment to show only modest gains. Ju-yeon, Arirang News.